What's going on, everybody? What's going on? All right, let's go. Hopefully, you guys are enjoying this beautiful day. If you're in Atlanta, it's really beautiful today. So, all right, let me make sure you guys can see me. Perfect, perfect, perfect. All right, what's going on, everybody? Dre Parker here. I'm gonna get started. The reason why I decided to do these lunch and learns, everyone, is because for those who don't know me, I grew up to a single mom in the projects, and we did not understand money. We did not understand business, and we did not definitely understand insurance and investments. So I wanted to talk today briefly about the benefits of term life insurance. So let me make sure everything is good. All right, cool, cool, cool. So, growing up in the projects, none of us knew about life insurance. Fast forward, I started working at 13, started my first business at 22 years old, where I had no business or financial acumen. So, I'm out of business in a few years. So, everything that I'm sharing with you guys, I want to make sure that if I can help somebody else's family not go through some of the things that I went through or a lot of other families that I know go through, then that is my mission. So let's go ahead and dive in. Now, you hear a lot about insurance or life insurance, and there's so many different types, and everybody gets so confused with it. So my job is to make it a little less confusing for you. However, anything that I share up here is for educational purposes. Everyone has different views, different opinions, and just make sure that you're doing what's best for your family. And always remember this, if you're educated, then you'll be in a position where you can make informed financial decisions. So let's talk about the benefits of term insurance. For one, you have cost. It's very cost effective. For two, it takes care of you for a particular period of time. The third thing is you might have a term with living benefits, which is really good for you. And of course, it gives you a peace of mind. Now, I think that's the biggest thing that any insurance offers you is actually a peace of mind. But when it comes to cost, it's inexpensive for coverage. For an example, you can have a 50-year-old, my age, example of a male preferred non-smoker. You can get a $500,000 policy for as low as 38.98. Now, of course, all life insurance is based upon your age, your health, and some other factors like your health history, family history, driving record, and stuff like that. But that's pretty inexpensive. You probably would agree. In time, it covers you for a period of time that you might need it most. Maybe if you're young, or if you have a family and you're young with a family, you got a mortgage to protect, you have kids in case something happens, you want to protect your income. And when it comes to living benefits, the good thing about term living benefits is if you end up having any of these illnesses, a critical illness, a chronic illness, a terminal illness, or even a critical injury, it'll protect you during that time period of the term. And of course, my biggest one is I think everything that we do, y'all, is really for peace of mind. So it gives you a peace of mind that if something happens during this period, my family is covered. So people always ask me, well, how do I determine how much life insurance that I need? And you may have heard this before. It's really the dime method. You got to take a look at your debt, right? You got to take a look at the income because life insurance is really to cover your debt, cover your income. If you have a mortgage, you want to make sure if something happens to you during that time, you want to cover your mortgage. And if you have kids in school, like myself, my last one, congratulations. He's in college right now, but you might want to cover education expenses if something happens to you. So you tally all that stuff up and you can get an idea of how much life insurance you actually need. Now, I have to say this. This is how you determine how much you need. However, and this is most important, you should know that your budget, always remember this, your budget will always supersede this dime method. Because if you don't have, and that's why term is so good, because if you don't have a big budget, you have a lot of income coming in, you can still get a certain amount of protection, which I think is really good. And let me give you some scenarios of the benefit and how it can actually help you out. So I'm going to give you a few scenarios, few examples. Let's say you're a 35-year-old male, right? if you're a 35-year-old male and you have a wife, you have 3 young kids, you have a mortgage, you make $100,000 a year, and you have a $2.5 million 30-year term policy. This will give you a peace of mind to know that if something happens, your income will actually last you for 25 years if you die during the term. Now, that's pretty good. Your family doesn't have to worry about where they're going to get money from. I always say, like, especially to the men out there, the married men, like, you don't want your wife to have to call Tyrone to get some money. So you want to make sure that you're doing the responsible thing. Another thing is if you're a 40-year-old, this is another example, 40-year-old female. Let's say you're a 40-year-old female, you're single, right? You have a mortgage, you have no kids at all. And you end up getting a critical illness, a chronic illness, terminal illness, or a critical injury, or even Alzheimer's during this time period. You have a peace of mind knowing that your lifestyle can be covered if you have a policy with living benefits. And, the beautiful thing about term is you have different types of term, like the living benefits, like I just mentioned. But here's this last scenario. Let's say you're a 35-year-old man and you have a 30-year term with a $500,000 death benefit and living benefit. You have a few scenarios. You might decide a few choices here is before the term expires, or let's say at age 65, you may decide that you want all your money back. Like, hey, I put all this money in, and at 65, I want to get my money back. And this is what you call a return of premium. Or you might have another choice, and certain companies offer these things, is you might say, hey, let me take a fraction of the death benefit. I don't need $500,000 in coverage anymore. You might decide to take, depending on the company and depending on what the stipulations are, $125,000 out of that and have that covered and paid up until age 120. Or you might say, hey, and this is beautiful because there's so many different types of strategies, and a lot of companies out here do a lot of different things to incentivize people to get life insurance, which I think is really great. Or you might say, hey, I need the total 500,000. I feel like I need that. But you might say at that time, I'm going to go ahead and keep the $500,000 and know that I have 15 more additional years of coverage, and I'm covered until age 80. Now, there's a lot of different companies out there. I happen to represent a lot, but the beautiful thing is it's always going to be based on your situation and your scenario. I just want to share with you the good stuff and also some of the negatives that you might hear about. Your policy doesn't build cash value. So that could be a negative for you. You might want a policy that builds cash value. Another thing is if you outlive the term, you won't have any benefits. That could be a negative for you. And I'm going to share these things so you can decide, what's going to be in my best interest, short term and long term. And if you don't invest enough, and I gotta hit on this one really hard, y'all. If you don't invest enough during your younger years, you can't become self-insured in your latter years. So if you're buying term and you want to invest that difference in different investments, please make sure you're investing enough to make that a reality. Because if not, when that term expires, you're not going to have enough assets to become self-insured if you believe that, that's a goal that you're trying to reach, is to become self-insured. And it may not be good long-term for estate planning and wealth transfer. Another negative is if you decide to purchase another term at the end of your term, it's going to be based upon, you have to know this, it's going to be based upon your current age and your current health conditions. So if you had a 30-year term and maybe 5 years before the term expired, you ended up getting some type of sicknesses or types of illnesses, well, it might be hard for you to get coverage. And last but not least, I want to share, if you decide to keep the term policy, which is your choice, you can, the company that you have it with, you may have a lot of money that you're going to have to pay. Well, I shouldn't say may. You're going to have a lot of money that you're going to have to pay if you decide to keep it. And that's every single company. It's not one company, it's not two companies, but every term company or every term policy has this provision where you may go from paying $540 a year for 30 years, a level term, but then you might end up paying 10,000 if you decide to keep it, like at age 61. So I think the biggest thing is to understand the benefits of life insurance and understand, hey, I can get this term policy. I might not have a whole lot of money, but I can at least protect my income, protect my family, and I know that I'll have a peace of mind. So hopefully you guys understand this now. Of course, there's a lot more to this. I wanted to keep these lunch and learns pretty short, pretty simple, but there's a lot of people within my community, I know for sure that when they come to me as a professional and they don't know just the basics. So I want to be able to expose you guys to more education. I'll be doing these lunch and learns every single week for the month of November, every Wednesday. So hopefully you guys are getting this and you realize that, hey, you know, the greatest asset that you guys have is your ability to earn an income. And that's exactly what life insurance will do. It'll replace your income if something happens to you or when something happens to you. So hopefully you guys got that. If you missed this, it'll be on YouTube. So make sure you subscribe to my YouTube channel. There's a lot of free training up there. And I want to make sure that we have no excuses on educating ourselves when it comes to finances. So I'll talk to you guys soon.